I want to start with an interesting factoid that we stumbled upon the other day. Between the quintet of India Inc.'s heavy hitters, and many of them are in this room, that's Mr. Mukesh Ambani, Mr. Chandrasekaran, Mr. Kumar Mangalam Birla, Mr. Mittal, who's here, Mr. Sajjan Jindal, a little over $172 billion of capital expenditure has been lined up over the next 12 to 16 months. That's 5% of our nominal GDP for fiscal 23. From cement to steel, green energy to EVs, 5G, home is clearly where their heart is. But is that enough? Prime Minister, Mr. Modi, urged Indian industry to unleash their animal spirits right after budget, nudging all of you to step up, losing your purse strings, and capitalize on the new global supply chain opportunities to boost output. So let the entrepreneurial instincts flourish. Mr. Kant, I want to start by asking you with a counterintuitive question, which is, when global trade is slowing down, is 8% really a realistic target? Nobody is convinced that any economy, including China, will continue to grow at 8 to 10% over the next 5 to 10 years. So do we need to recalibrate the number itself?
So over the next 5 fiscals, it's largely projected that India will grow at about 6.8%. My personal view is that it's not adequate. India needs to grow at minimum 8% per annum over a long period of time. If you have to become a $5 trillion and then subsequently a $10 trillion economy and raise the per capita income of Indians, I think what has happened, if you look back, the government has carried vast number of structural reforms from GST, IBC, RERA, bringing down corporate tax rates to redefinition of MSMEs, etc. It's pushed for manufacturing through the production-linked incentive scheme in a very big way. And I think if you look across the world as well, there are countries in the region itself, Korea, Taiwan, earlier Japan, and in recent times China, which have grown at double-digit figure for almost 2.5 decades plus. Yeah. Even during periods when the global growth was slowing down, and India itself has grown earlier at high rates of 8 to 9%, but it's grown for relatively short periods of 4 to 5 years. But we need to sustain this over a 3-decade period, and I've been a long-term believer that this can't be done without the private sector actually accelerating the pace of investments. I think the gross fixed capital formation in India has to rise. It's increased to about 29%, but at its peak, it's been at 36% in 2004. And that needs to be accelerated. I think the real point is that right now, the corporate balance sheets are really good. The bank balance sheets are really good. The NPAs are at an all-time low, 4.4%. Also that the government gave out a huge bonanza of 1.4, in 2019, August to September, what was it? The government gave out a bonanza of 1.45 lakh crores to bring our corporate tax to international levels. And I think it's really time to ponder over whether the country would have been better served if that resources would have been put into infrastructure or would have been used to push a consumer demand if the private sector is not investing adequately. I think the animal spirit of the private sector must rise up to the occasion now. To my mind, it's imperative, it's absolutely imperative that now is the time for the private sector to go and take all risks. If you look back in the last 3 to 4 years, actually, other than 3-4 large private sector groups who've taken the risk to invest, there are very few private sectors the balance sheets are really good now. Now is the time. So there is consumer demand is rising, capacity utilization has taken place. The country has to grow. So it's the time now for the private sector.
This is the time. But Mr. Kotak, I'll come to the private sector part, but a large part of our investment story is also predicated upon FDI. And since FY21, FDI figures are coming down. With this narrative around nearshoring, reshoring, do you worry FDI inflows into countries like India will further go down? Like venture dollars, I mean, from it's 2 billion, which has come down from 12 billion in the Jan-March quarter alone. So is that a problem area?
I think divided into two parts, the strategic part and the tactical part. You've seen a significant slowdown in the rest of the world, valuations correct, particularly in some of the startup and the tech areas. Therefore, the slowdown in FDI is much more linked to those events around which a lot of investment came, probably at very high valuations. But if you look at India's position today on the global stage, India has managed its geopolitics for its economics brilliantly. I can't think about any country which has positioned itself the way India has in this round of geopolitics. 1 year ago, when we had this big Russia invasion of Ukraine, I was very worried. Oil was going up. What's going to happen to India? We've got to take sides between Russia and the West. But India navigated that position and is today on the global stakes table of geopolitics. With that, smart economics, low oil, and keeping the flow open is another big plus. Therefore, talk to most investors in the world. There are not too many places on planet Earth which give the kind of stability which India has today. And the nature of investments is moving more, not necessarily in startups at very high valuations, to more real economy areas. And from all that we are talking to some of the largest sovereigns and pension funds around the world, they're wanting to come in scale and size and are actually looking at a lot more flowers bloom. One of the things which has happened is you talked about 5-6 groups. We need many flowers.
Yeah.
And what we need to see, in addition to larger investments by these 4 or 5 groups, why can't we see the animal spirit come into broader corporate India? And that is our challenge. Let's move beyond that. And Mr. Kant, rest assured, private sector will rise to the occasion, give them time, and do not suggest increase of taxation, please. Thank you.
I'm saying this simply because, we've been saying that we've been at the cusp of this big private sector capex boom for the last 2.5 years. It's time we actually did it.
True. How significant would you say is the fact that if Apple is successful in India, I'm not talking about opening stores, but actually bringing manufacturing and back-end supply chain, will that be a big moment?
No, it's very, very significant. Let me first say that you have a major mobile manufacturing company partly relocating and partly enhancing its total manufacturing in India. Well, Apple is a much talked about story here, but Samsung has done this in a much bigger way as possible. It's happened in electronics, but if you look at the production-linked incentive scheme, we are doing it across 14 sectors. So if you're spending 27 billion, that means you're giving 5%. The objective is that we should actually get 520 billion worth of investment in that overall. That is the logic that we do not have size and scale of manufacturing, and therefore to make you bigger and bigger and bigger, and every year you keep enhancing your production and productivity to become global in size and scale. But the important thing to realize is that the PLI is there for just 5 years. India must become a highly productively efficient economy. We must be very competitive. We must be more productively efficient and more competitive than China is right now in 5 years' time. That's the challenge for all Indians. And that would require us to scrap even more rules, regulation, procedures, and states to really act. You need about 10 states of India to grow at double digit for India to grow at 8%.
Yeah. But Mr. Mehta, our strength has always been services. Come what may, they have actually cushioned our stock markets. Is the manufacturing narrative overwhelming the services story, which has been robust so far in India and has worked?
First, I think the important bit is it's not an either-or story. For us in India, it has to be an and story.
Yeah.
Services is a very strong bedrock. It has to grow. and we have seen the export of services. They've done extremely well. Manufacturing, which is today less than 20%, has to move up to somewhere in the vicinity of 24, 25%. You know, we're talking about creating massive amount of jobs, and very clearly, the collateral impact which manufacturing will bring in is immense. So we do need manufacturing. It's not just that we can grow only with services. But I'll just give you, talking about private sector investment and all, 2 data points, which gives us confidence that the private sector investment should come back. First is the capacity utilization for the same quarter this year. March quarter versus the same quarter last year, it's gone up by 200 pips. The other is, if you look at new proposals which CMI tracks, in the last quarter, it has been 12 trillion rupees, out of which 92% is private sector. And this is 2.7x more than the average of the previous 11 quarters. These are good signs. I don't think the risk appetite of any manufacturer in the country has gone down. And at the end of the day, we must also remember we should not get again back into the era of reckless investment and reckless lending. If it is driven by demand, I see no reason why manufacturing investment or capacity investment won't go up.
Correct. Mr. Jindal, you have operations around the world, including US. Now, with the CHIPS Act, the Inflation Reduction Act, won't industries also move to US? I mean, companies have committed over $200 billion for US manufacturing alone. Other countries in Asia, in ASEAN, are also rolling out the red carpet for this whole China plus one strategy. Aren't you like facing a problem of plenty?
No, I think the US, the industry in the US, they wanted to cut their costs, and they outsourced all their manufacturing things to China and, similar countries globally. And I think they realized that what that has happened is that they have given their control in the hands of the Chinese companies. And now this government, Biden government, has realized that this is not the way US would want to do. And today the globalization is become like back to the old ways of doing business, back into their own economies. And that's why US is really supporting the industry within the US. And every country globally is doing that. They are all trying to promote industries, manufacturing, components within their own countries, and that's what...
Even our ASEAN countries.
Even ASEAN countries. Yeah. Similarly, India is doing the same way. The PLI scheme is a very supportive scheme, which is supporting the manufacturing within India. And I think the benefits of this will show up in the coming years very clearly.
Mrs. Reddy, I wanted to ask you that other than investing poorly in mass education, would you agree that we have not done enough to bring women into the workforce, which is a crucial initiative that several East Asian nations actually did to expand domestic export of labor-intensive sectors?
Maybe you're asking the wrong person, but I will still answer that. In a lot of industries, it is the women who are the back end of the workforce now, whether it's healthcare or services, IT services and banking. There are a lot of women out here. So I think they're capable, can be done. And for an economy which has to grow, women have to be brought into the workforce. And we have to acknowledge that. So,
are we doing enough, or what more needs to be done?
I think there's more which needs to be done. In terms of equal opportunities, women can do so much more. Even choices for education, I think they have to be incentivized to really take up higher education. And I think that some incentive for women to take that up is extremely important. For them to be able to work in a surrounding, in a situation which is maybe very male-centric, I think some amount of support and acknowledgement would be good. But we need to do a lot to bring women into workforce. But I come from, a business where it's largely by women, and now because there's 4 of us, all women, we run it. But I can see that, women coming into the workforce would be good, important, and would definitely take the economy further.
Mr. Mehta, from an MNC point of view, with US dollar at 5%, hasn't the overall hurdle rates gone up, vis-a-vis ease of doing business to currency depreciation in India? Is it that much difficult for CEOs to convince their boards? I'm talking about MNCs, vis-a-vis investing in India.
Let me give you an example coming from the company I lead, HUL. India today is the largest Unilever business in volume terms. Mm-hmm. And in another few years, it would become the largest Unilever business in value terms. So from a Unilever perspective, the top priority
is India.
Yeah. Now, Unilever is not an exception. Uh-huh. In the last few weeks, there have been several global corporations who have invited me to speak to their boards on the India story and how HUL as a multinational subsidiary has succeeded in India. Yeah. I don't think the interest in India that we see today was as high today as it was ever before. There's huge amount of enthusiasm towards India. And our job is to make that potential into reality.
Okay. Mr. Kant, if we talk about labor, and if we compare it with China, the labor cost in China, around $8, is much higher than that of India. But in manufacturing, the total labor cost in proportion to the total cost of production is less compared to services. Services, on the other hand, we're seeing, a lot of it is moving to India because to exploit the labor cost arbitrage. Back offices of banks, global capability centers of big tech companies. But if we take into account logistics, regulatory costs, we are nowhere close to India or even Vietnam or Malaysia. Thus, many would argue manufacturing FDI is not moving to India the extent to which it should. What should we do?
So India needs to fire on all cylinders. I mean, it can't be that India can grow on services. A large country like India, which is bigger than 24 countries of Europe, can't grow only on services. India needs to grow on manufacturing. Manufacturing must account for 25% of India's GDP to create jobs.
Right.
It also needs to grow on agriculture. The agricultural productivity is very low. Productivity must rise in the agriculture sector. And India must grow on urbanization. Urbanization can be the biggest driver of India's growth story. And I think all this is very closely linked to creation of quality infrastructure. And I think one of the key things which has been done in the last 2-3 years in the budget is taking the outlays for infrastructure from 6.7 lakh crores to about 13.8 lakh crores or something, almost doubling the outlay. So the focus on creating top-class quality infrastructure is huge in terms of creating good quality roads, in terms of creating expressways. I mean, to have created 55,000 kilometers of road, that's almost 1.5 times the diameter of entire Earth. So if you travel around the country, you'll see that the quality of infrastructure and the turnaround time at the ports, etc., has hugely improved now. And I think that will have a long-term implication on better productive efficiency in India's economy.
Mr. Kotak, if I look at the RBI data, it shows large capex projects, which are over 5,000 crore investments, has seen a significant drop in the last decade. Should we therefore infer that small is beautiful, and that should be our new capex strategy? In Germany, the focus clearly is on MSMEs. In China, in US, they go in for national champions. What should we do?
I don't think it is either or.
Okay.
I think we really need to grow our MSMEs. We need to really build the middle India. And we cannot get away from that. So getting the point which I made, development of India across sectors requires deepening of entrepreneurship, of really making it easy on the principles of ease of doing business even further. We've made progress on this, but there's a long way we can go. We are also seeing a significant consolidation in many sectors. And I have players from the telecom sector. Look at the level of consolidation which has happened. We are from 13 to 3 players, which is inevitable part of evolution. You're seeing that in the airline sector. You're seeing it
Steel,
steel.
cement.
So cement. So I think consolidation is good, but it should not be at the cost of net increase in capacity and growth. Therefore, I genuinely believe entrepreneurship really needs to fire, and I share with Mr. Kant his desire for much higher growth. But we must put in place the enablers for that. It's big business, it is MSME sector, and I think it's the banking and the financial sector. What is the capacity of the banking and financial sector if India wants to grow to a 10, 15, 20 trillion economy? Are we having the capacity for that? What is the ability of capital? What's the ability of underwriting skills? What is the ability to take scale? I mean, if Sajjan Jindal is here and I'm saying this, if Mr. Jindal wants to acquire a 50,000 crore asset in India, he should be able to get funding for that acquisition finance in India. He should not be going overseas for getting that funding. Why can't we have those skills and underwriting ability within India rather than saying, oh, this is too risky for our banking sector and therefore we keep banks away? We have to be very careful. We can avoid accidents on the road, but we must let cars drive much more on the road than they may be.
But you said that there is this concentration that is happening. You accepted the fact that there's too many, the total industrial investments do reflect a period of, a picture of concentration. How do we break that? How do we have the real animal spirits get unleashed?
I'm quite comfortable with reasonable consolidation, as long as it does not lead to monopolies. So if we avoid monopolies, but have some consolidation, that's good for economic outcomes over a period of time. It's a right balance we need to get. Therefore, I'm not worried about consolidation if 13 became 3, but I would worry if 13 became 1.
Mr. Jindal, everybody talks about environment and sustainability. We also mentioned that. How is environment and capex interlinked to the sectors you operate in, which is steel, cement, power, and more importantly, who pays for it? The private sector, the government sector, or should multilateral agencies like the G20 or IMF should step in?
So I think the global warming or the change in environment is a real thing. And so therefore the energy has to become sustainable. And we cannot afford to continue to burn the fossil fuel and keep polluting the environment and creating more and more CO2 into the atmosphere. So all our businesses, unfortunately, are very CO2 emitting businesses, whether it is steel, power, or cement. And so these are difficult businesses. And therefore, there's a huge amount of concentration in how to optimize, how to improve, while continue to grow, how to improve and reduce the risk of generating more and more environmental damaging gases. And that's where a huge focus is there. And therefore, in our power generation business, renewable power is the way forward. But my basic theme or thought process is that ultimately it's the economics which drives everything. As long as we can have economic solutions, like for example the renewable power today, whether it is solar or wind or pump storage or hydro, it's becoming more and more, because of the evolution of technology, it's becoming more and more cost competitive versus fossil fuel based electricity. Similarly, in the steel production, you burn more coal, which is very expensive. So you want to bring in new technology by injecting hydrogen and stuff like that, so that you can reduce your burning of coal. So these are the sustainable ways of doing business, and that's where the whole industry globally is working, and India also is focusing on that. But I think India still, these are early days because we are a new country, new developing country. We have to build, but Europe is taking the lead. On the second question, that how the multilateral agencies will they
Or who
fund?
should? I mean, should the private sector, should the government
Should
sector,
the-
or,
yeah,
or
or the
should some agencies
Right.
like IMF or
So
G20 take the proactive steps?
Correct. So one thing is very clear: the customer is not going to pay for all these extra cost.
Yeah.
If you want to make green steel, then obviously it will be much more expensive than what is the way it is being produced today. But customer is not going to pay for that. So whether the government will pay, I don't think in India the government is going to pay. In Europe, governments are paying. They are providing a lot of subsidies to the steel industry or to the other industries, and that is also becoming a sort of restrictive practices so that imports of steel into Europe won't happen. So that's how the European countries are doing this whole strategy. But in India, we as industry, we don't believe that though Mr. Kant is sitting here, that the government will be able to pay for these kind of thing. There could be some sort of cross subsidy could probably happen, that they will put more tax on coal and then subsidize some industries. But I'm not a great believer of government supporting or subsidizing, and I don't even want that. That should not happen. We have to sustain ourselves. We have to create our own ways to do. In I think COP26, the European or the Western countries had promised $100 billion for the emerging markets or for the new countries, but not a single dollar has come into any country. So therefore, I don't expect even that money coming in.
Yeah. Mrs. Reddy, the other capex, we keep talking about human capital. I wanted to ask you about R&D capex in pharma. Why are we nowhere close to even some of the emerging markets when it comes to R&D capex?
I think over the past years, what has happened is, in a way, it's the survival. So all the capital was going into starting a business, running a business, and making it successful. But now we are at a time when research and development has become so important, and there is capital available now to put into it. And it's like investing for the future, is that if we start investing into R&D now, we know that few years down the road that we will be able to capitalize on what work we've done over the past 5 years. And I'll give you a small example. Even in the pharma sector, a lot of R&D did happen in the West, but we know that it's come into our country. We also now are the largest population, 1.4 billion, and we have the largest gene pool in the world. So if we can really work on this, we would come up with solutions which would be far better than what exists now. And this is a simple example. So I think everyone is waking up and realizing that investment into R&D actually pays like great returns in the future. So if it didn't happen in the past, I'm very confident that it's going to happen in the future. In every sector which we see, even if it's green energy, I think a lot of R&D has gone into it that we're even able to talk about, responsible or renewable energy. It happens in healthcare, it's happening in pharma, it's happening in construction, for example. So I think it didn't happen earlier because we needed to exist, but we're at a cusp and we will be seeing more in the future.
Right. Now, the vaccine makers are also saying that they're starting production once again. Where are we in terms of our sense of preparedness? What have been the key learnings from the second wave?
I think you must give credit to the vaccine makers and the fact that there was huge trust and support that, we should be vaccinating. And we came out in flying colors. Globally, we were one of the best countries which did so well, both because of the production and from government policy and support. Preparing for the future, I think as mankind, we have to do. and everybody is doing it. We just have to pray very hard that there's not one more black swan event, because on one side you're saying we want 8% GDP, and on the other side we're even thinking about this. So let's keep our fingers crossed and hope that there is nothing. But I think preparedness, a lot is happening with, with all the companies and the government pushing to say that let's prepare for the future, and these are the norms.
Mr. Mehta, everyone talks about this demographic dividend, billion plus population. But market sizing should be ideally linked to consuming class and not the full population. Do we get it wrong?
Yeah, look at it from this lens. Often what happens is when we look at India, we do percentages.
Yeah.
And when you look at that part of the population which has much more disposable income, yeah, and we say that the percentages are very small. Yeah, we do a proprietary research. And if you look at people with more income and also based on behavior and lifestyle, that comes to about 14% of the households in the country. Yeah, 14% of the households out of about 300 million households. You're talking about even this class being in size bigger than most European nations.
Yeah.
So this is substantive. But then we have to understand that in India, the issue is also when you de-average, it's not about a $2,000 per capita or 1.6 lakhs per annum rupees, is you have to look at it from a perspective that there is still a large population which is at the bottom of pyramid.
Yeah.
And that is where what we need is inclusive growth. Yeah, not just a GDP growth of 7-8%, but if we can spread it across, and these are the people whose consumption of even FMCG products is just about $20 per capita. So just look at the runway to grow. Once the country keeps growing, most of the industries would have huge runway to grow. So demographic dividend is a reality, but it has to be intertwined with inclusive growth to make it come alive.
How has your consumption base broadened, and to what extent is that base actually uptrading?
Yeah. Say, just to give you an example, our premium products, very simple terms which are indexed at 120 to the average of the market. The premium products have been growing at 100 bips per annum, the share of the turnover.
Right.
Today, 1/3 of our portfolio is what we call as premium products. And here I'm not talking about masstige or prestige. And if the country keeps growing, just look at, again, how much more you can lift the consumers to higher order benefits.
Mr. Kotak, this whole debate about the supremacy of the dollar, do you think it's, the days of the dollar hegemony is over?
I genuinely feel the biggest financial terrorist in the world is the US dollar. All our monies are in nostro accounts, and somebody in the US can say, you cannot withdraw it from tomorrow morning. And you're stuck.
Yeah.
That is the power of the reserve currency. And I think we are at a very crucial time in the world history, where the world is desperately looking for an alternative reserve currency. These changes happen once in hundreds of years. The last time it happened was when it moved from the British pound, at a time when people used to say the sun never sets on the British Empire, to the movement to the US dollar. The question is, which country in the world can take that position? And I'm just giving a few examples. I don't think Europe can, because it is disunited states of Europe. I don't think UK or Japan have the heft to be taking those positions, though the currency, both the British pound and the yen, are free currency. China, I think, has a major issue of trust with many, many countries around the world. can India do it? And for building ourselves to a reserve currency is a long, sustained walk and run India has to do. It has to build strong institutions. It has to build a framework which is not dependent on the whim and fancy of A or B or C. The mechanisms have to be strong. India has to be trusted. The US dollar on every dollar bill has a line, in God we trust. We have to get a line to say that in India we trust for the rest of the world to put their money into an alternative currency to the US dollar. But it is our time for making a shot at it, which will take us probably 10 years. But I don't think China can make it. I don't think Europe can make it. Otherwise, the US has an unbelievable, uncomparable privilege of being able to print money and get away with it as it has for the last 100 years. Thank you.
I think we have the Honorable Finance Minister, Shri Nirmala Sitharamanji, with us. So can we actually do that? I mean, that's the ultimate unleashing of the animal spirit.
So, there's a point because if you look at the post, I thought Uday had a point because if you look at the post-COVID era, it has had a devastating impact. 200 million people have gone below the poverty line, 100 million people have lost the job. And the financial policies pursued in terms of loose packages, high inflation, tightening of interest rates is actually leading to a scenario where resources are flowing from emerging markets to the developed part, whereas future growth is all going to come from emerging markets. And therefore, there is a need to look at international financial architecture in a very big way. But I wanted to get down to this point which Sajjan Jindal was making about, my belief is that it will not be possible for private sector to grow at high rates of 8% plus for a long time without a different paradigm, and that is without going digital and without going green. We've demonstrated our ability to do digital transformation in a very big way through the digital public infrastructure. We do 11x more real-time payment than what USA and Europe do. We do 4x more than what China does. We've used that to transform lives of citizens. And a similar process of technological leapfrogging needs to be done in going green. We do about 200 billion worth of fossil fuel imports. We are climatically blessed. The government has put out the green hydrogen mission. We can be the cheapest cost producer of green hydrogen. We can be the biggest exporter of green hydrogen. We do about 172 gigawatt of renewable energy. We become the leader. And I think we should use that to produce, because it's not just electricity as energy. It's the hard-to-abate sectors like steel, cement, refinery, fertilizer, which need to be decarbonized. And that is critical for the country. There, India must become the leader.
No, what he also wanted to understand is who bears that cost. Should institutions like G20 or the government or the private sector, because there will be a cost factor to it.
G20 is not a financing agency. My view is that companies which go green, which go digital, are going to attract value. They are going to attract capital in the future. They will become the most valuable companies of the world. It's the market which will decide it. If Mr. Sajjan Jindal doesn't go green, he will not be able to export to Europe and beyond after 2026. So it's incumbent upon Indian companies to go green to become globally competitive.
Thank you so very much, all of you, for an engaging conversation. Pleasure. Thank you.